Welcome to the Riskwiser Zone, the show where we dive into the world of stocks and finance to help you make informed decisions about your investments. We've got a lot to cover in today's episode, but first, let's take a look at what's been happening in the markets. It's been an interesting week, with tensions between the US and Europe causing some volatility. President Trump's threat to impose tariffs on Europe over Greenland has had investors pulling out of US stocks, with nearly $17 billion being withdrawn this week, according to data from Bank of America. Despite this, emerging market stocks, currencies, and precious metals are seeing a surge in interest, with the MSCI Emerging Markets Index heading for its fifth successive week of gains. Investors are looking to diversify their portfolios away from U.S. assets, with some describing it as a quiet quitting of U.S. bonds. In other news, natural gas futures have paired a record-breaking three-day rally, dropping as much as 7.6% after surging 63% over the previous three sessions. The surge was driven by forecasts for below-normal temperatures across most of the country, but prices are still on track for their biggest weekly gain in records going back to 1990. We'll be keeping a close eye on these developments and more throughout the show. Our goal is to provide you with a balanced view of the markets without any bias or agenda. We want to help you make sense of what's happening and how it might impact your investments. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into a fascinating story that's making waves in the world of geopolitics and energy markets. A recent price spike has sent shockwaves through the gas trading community, with some traders feeling the pinch after making bets on a mild winter. The situation is being described as violent by some market watchers, with prices surging unexpectedly due to colder-than-expected weather in certain regions. To break it down, gas traders had been betting on a relatively warm winter, which would have led to lower demand for natural gas and subsequently lower prices. However, the unexpected cold snap has resulted in a surge in demand, catching some traders off guard and leading to significant losses. This price spike is having far-reaching consequences, with smaller players in the market being squeezed out by the high prices. In related news, Hungary's opposition TISA party is seeking to chart a new course in the country's relations with the European Union. The party's new foreign policy chief, Anita Orban, has signaled a potential shift in Hungary's stance, indicating that the country would only veto EU decisions if core national interests are at stake. This could mark a significant departure from the current government's approach, which has been criticized for being too close to Russia. It's worth noting that the TISA party is currently leading in the polls ahead of upcoming elections, and their stance on foreign policy could have significant implications for Hungary's relationships with other European countries. As the situation continues to unfold, it will be important to watch how the party's policies develop and how they are received by the international community. The intersection of energy markets and geopolitics is complex and multifaceted, and this story highlights the potential risks and opportunities that arise when these two worlds collide. As we continue to navigate this intricate landscape, it's essential to stay informed and adapt to changing circumstances. Welcome back to the Riskwiser Zone. As we wrap up today's show, let's take a closer look at the recent surge in gold prices. Gold has been on an absolute tear this week, gaining over 350 OOOs or 7.9% to trade within reach of the 5,000 OOOs psychological barrier. This move coincided with a weaker US dollar and turbulence in major US stock indexes, while other commodities like crude oil slipped, highlighting a more targeted flight to safety. The rally in gold and silver, which topped 100 USOS for the first time, suggests that investors are seeking safe haven assets amidst uncertainty and potential instability. The U.S. president's recent comments on a possible non-consensual annexation of Greenland sparked a risk-off swing, but unlike previous instances, the market has not unwound its positions even after the administration walked back its comments. This shift in sentiment may be a sign that investors are repositioning for a longer haul of constant uncertainty and potential instability. The Fed's next monetary policy decision, set to be announced next week, will be a key test of how long-lasting this shift in sentiment might be. If the Fed takes a more hawkish position, it could impact gold prices and provide insight into whether the market is now more attuned to geopolitical and economic risks than to monetary policy mechanics. In the world of stocks, we saw some notable movements this week. Tech giants like Microsoft and Alphabet were up, while companies like Boeing and Caterpillar were down. The Dow Jones Industrial Average and S&P 500 also experienced volatility, with some days seeing significant gains and others seeing sharp declines. It's essential to remember that market volatility can be unpredictable, and investors should always prioritize caution. As we navigate these complex markets, it's crucial to stay informed and adapt to changing circumstances. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, keep your finances in check.